right, it's time for the Word on Wall Street. Top investors watching your money. Joining me now is Michael Lee, strategy founder Michael Lee, and Baird investment strategy analyst Ross Mayfield. Guys, good morning to both of you. Mike, I do want to start with you. We had the breaking news at the top of the hour with McDonald's. Futures getting a nice little bump on that news. The numbers for McDonald's pretty good. Crossing the tape, like I said just a couple of moments ago, it was double beat. Revenue climbed 14% for the third quarter. Same-store sales in this country, 8.1% to the upside. A lot of that, of course, Mike, was price increases. And then we're looking ahead now to Apple after the bell on Thursday. What do you make of all of this so far, Mike? I mean, is it a muted earnings season in your opinion, or are there some, I guess, bright spots amid all the negative tech news we've gotten?
Well, you know, what I found was interesting is you had spectacular numbers from both Microsoft and Facebook or Meta last week. And the stocks were not rewarded whatsoever. And it's, the average this quarter is like a 1% gain for beats or a roughly 1% loss. And for the stocks that miss, you're looking at double-digit declines that are just getting clobbered. And that just goes to go with the sentiment that interest rates are blowing out and the recent market weakness we've had. It's hard to overstate the significance of Apple's earnings this week. Apple, the stock is still up 30% year to date, but down about 15% from their high. What are we going to hear from them? It looks like revenue is going to be down 5 or 6% year over year, but earnings are expected to grow. How are the new iPhone sales going? Is their services unit continuing to grow because it's a massive margin business for them? So all in all, it's been a pretty decent earnings season in line with expectations. As I look forward out a year, though, the market, the consensus estimates for next year are for roughly 13% earnings growth. I have no idea how on earth that's possible. That's assuming a massive economic reacceleration, which I'm not seeing in any way, shape, or form. So again, I'm watching Apple closely this week, as well as the Treasury funding announcement.
Yeah, well, let's look at the 10-year Treasury yield this morning. I want to turn our attention, speaking of jobs, to the picket lines. So the UAW and Stellantis did reach a tentative deal over the weekend. Now the union's expanding their strikes against GM at their Tennessee plant. They've cut the deal with Ford. Local UAW leaders approved that tentative deal with Ford. That's got $8 billion in new plant investments by the company, $5,000 ratification bonuses. So the union, they strong-armed, Sean Fain strong-armed the three automakers, and Stellantis and Ford have, I know they caved basically on a lot of this. Mike, what do you make? Because now they're putting their pressure on GM.
Well, look, all this comes back to electronic vehicles. Last quarter, Ford lost, on average, $37,000 per electronic vehicle sold. So if you're going to move forward, if these companies, if their strategy is to move forward with these EVs, they require like a third less labor, and on top of that, nobody wants to buy them, and they're losing billions of dollars trying to make them at the behest of the Biden administration. So Ford is pulling back on their investment in EVs, and I think all the other companies need to follow suit. They'll be able to pay their workers more. Everything boils down to inflation and electronic vehicles with these strikes, in that the last major deals were negotiated in 2019. The unions gave up a bunch of concessions during COVID to help the automakers out. And now the cost of living has skyrocketed, and they are looking at threats to their jobs going forward if you're going to move the fleet to more electric. So, the leaders for the unions are looking out for their members. And, I think GM is a horribly run company, and it's no surprise to me that they're the holdout here.
Really? That's interesting, too, because I can't remember, Mike, if it was Ford or if it was GM that said, look, we can't afford. Now, this is when the union was pushing that 40%, pay raise, or 45%, and the companies were like, that would bankrupt us. What I think is interesting, what you're saying now, is that, and you're right about electric vehicles, that demand is softening. The Biden administration can talk till they're blue in the face about how great electric cars are, but if nobody's buying them, and that's what we're starting to see, that is the problem, Mike. Final word.
Yeah, no, look, it's all around this administration's energy policy has driven these strikes. It's a big component of what's caused inflation, and it's a big reason why these automakers can't afford to pay their workers higher wages, and it's a threat to the union workers in terms of the number of employees they're going to have because of the less labor required to assemble these EVs.
And I'm glad you brought up the concessions. They did during COVID. You're right. Of course, they deserve raises, but at some point, how does that break the company? I don't know. We'll see. Michael Lee, Ross Mayfield, guys, thank you so much for being here. It's great to see both of you as always. Well, coming